Next, guys, existing home sales rose 3% to start the year, but higher mortgage rates are already hurting. Now, hurting doesn't mean making house prices go negative. But again, we're talking about existing home sales rising 3%. This isn't declining. This isn't in free fall. And also, this is existing home sales, not home prices. So the doomsdayers about price and sales, it's, again, sorry, this is in the positive territory. It's a plus 3%, not a negative 3%. Sales of previously owned homes rose in January, boosted by lower mortgage rates and back in November and December. And the median existing home price for all housing types in January was $379,000, up 5.1% from a year earlier, and an all-time high for the month of January.
Yeah.
So here we are marching along into the new year. Happy New Year. It's January. Boom. Existing home sales are rising, and so is the median existing home price.
But right there, like I was saying, it's all the momentum that came over from previous years. So the data for me is a little bit skewed because it isn't new data. It's data that's rolling over from stuff that was already current. They just closed 2 months after.
Correct. I mean, we got to remember October was just brutal.
Yeah.
That's when rates were at 8%, right?
That small window was the time where everybody jumped in and we saw the numbers, but then where is it at?
Yeah, November, December. And so, yeah, exactly. And here it is, as soon as, now we're going into the month of February, ending it. And, rates, we already saw that we're in the high sevens, in the low sevens, but we're in over the 7 mark now. And it just pumps the brakes.
And the thing is about it is like, yes, it's that carryover from the November, December coming off of that terrible October. There's also a revitalization of, I think, sentiment from people. Like, it's the new year. This is the year I'm going to do it.
Yeah.
And they've started already. Like, you guys took more applications in January than you did in, I'd say, December and November maybe together.
Yeah.
But, and that results in open escrows now in February and March. But here's the thing. Even though this is still increasing in a positive territory, we're still at a 3-month supply of housing versus the 6 month, which they consider a balanced market. So we're still out of kilter when it comes to how much inventory we need to, let's say, right size the amount of homes that are exchanging hands. And that is then because of that, we have yet to see if that's actually going to hold prices steady, drop them, or let them continue to rise. And a lot of that has to do with the rate.
Yeah. I mean, I have this grin because I just don't see more supply coming up that quick,
Yeah.
We're going to see it. But we already know as, supply dwindles, it's just going to get that much more competitive out there.
It is on price. Absolutely. I know we had talked at one of our shows, like maybe 3 or 4 weeks ago now, we were making wagers on how many home sales we're going to see. I think I was at the very, very high end of that. So I'm probably going to eat it on that.
Yeah. It's like they say, as demand slows, inventory grows.
Yeah.
Right. Yeah. So that's what we're waiting for.
One thing I did wanted to mention is that mid-price homes are going to be the ones that have the highest competition.
Of
course.
And
I feel because of that's where everybody's trying to purchase in. Like if you're out in the millions, in luxury jumbo loans, there's not much competition there. You could probably snag a good deal because that house is going to be sitting on for months, if not weeks. But the mid-price homes where it's a condo, a 2-bed, starter homes for that matter, everybody's swarming towards those because those are what's somewhat affordable or or attainable at that moment, depending on when they get approved. So big pressure on that, I feel, coming in as the year progresses as well.
Even further to your point, the last article we're talking about where this gal, her first home she bought in 2013 was $101,000. Even at that time, that was well below median. And we're talking about Charlotte, North Carolina, which is, I think, traditionally below median. That's maybe true or not. I don't know. I don't know where they are on the plus or minus side of median. But now we're talking median $379,000. So, I mean,
that it?
Remember when conforming loan limits were $417,000?
For a long time.
For a long time, the conforming loan limit was $417,000. Now we're talking about median home price at $279,000.
Yeah. And now what, $1.6 million?
Ooh,
crazy.
So,
who would have known?
Inflation.
Yeah, that's crazy. Now, also interesting in here, though, is that even though listings are higher because rates are a little bit lower, those do couple and they go hand in hand a little bit. Still, 16% of the homes that were sold above list price. So, we talk about, and we've discussed this about the amount of homes listed that sell for below list price. It's typically 30 to 35%. Now you're saying 16% are sold above list price and the remainder are at price. And the elevated share of cash deals, 32%.
That's what I was crazy.
32% of deals being done cash. Yeah. That cash is coming from somewhere.
Investor money in deep pockets. Just enter the chat.
But here's the other thing, guys. A lot of times, let's not just think that it's hedge funds, investors. It could very well be people who are actually bridging their loans and paying because they have enough equity in their property. They're going to sell. They don't want to compete with other people, so they'll put a cash offer on there.
Yeah.
And what they'll do is they'll be provided with a bridge loan. Once we're going to give you a loan for this one,
but
all
once that
cash,
sells-
because we're already going to sell your other property. Once that sells, that's how you'll be able to repay us back.
So it's not in the way in my head where someone just shows up with a pillowcase and it's full of like
No.
bands. Oh, okay.
Oh, and you meet at a bridge?
Yeah.
Not a bridge.
You cross the bridge with your pillowcase full of hundreds. No, that's not how it goes.
Yeah.
First-time home buyers made up only 28% of sales, and when historically they make up 40%. I think that, again, evidences and kind of confirms that it's been more and more difficult on the affordability scale for first-time home buyers.
Of course.
Partly because of income, partly because of the price to get in, the entry fee, or the fee for admittance, right? I don't know. I don't know how you make up that gap, though, either, guys.
I mean, that's crazy. First-time home buyers made up 28% of sales.
Right.
Historically, they make about 40%.
And
That's a big change.
And so here's what it doesn't say, but it says that means that the other 72% are people that are already in. So they're already in the game. You know, we were talking a minute ago about, you can be a renter if you want. That's fine. Be a renter. But if you're in, it looks like right now, if you've already been in real estate, you stand a better chance of continuing to be in real estate.
Yeah.
And if you punch your own ticket out of real estate, that's your own choice. But it's kind of like once you're in, you're in.
Yeah.
And only negative circumstances might kick you out. But, I mean, this is a very low rate of first-time home buyers, and this is not a black eye per se, but this is not what they want. No. If you're saying historically you're at 40%, and now you're at 28%, that's a 30% decline, 40 to 28.
I'm glad
that's
somebody
a lot.
can do math.
That's a lot.
Me too. I'm like, where are my brains at?
But I mean, just think about that. Like that's a substantial difference on the negative side, and that doesn't help. I think give confidence to people that are trying to be first time home buyers. But it is what it is.
We need more homes.
We need more listings.
Let the builders build.
Let the builders build and bring. Hey, if you're looking to sell your house right now. There's someone who's in the 28%. Oh, want to buy a first time buyer. Let's
sell your house.
Let's help get that number back up to 40.
Yeah.